Hello everybody, welcome to this webinar today with the Chartered IIA. My name is Sophie Hall and I'm the Sectors and Communities Manager for ACCA UK. I'm delighted this morning to welcome Anne Brooke, who is our speaker this morning. Anne is the Head of Technical Content and Research at Chartered IIA and has been working in the internal audit and related professions for over 25 years. In this webinar, Anne is going to be exploring external quality assessments for internal audit, and the presentation should last around 1 hour. And we'll also have time to answer your questions as we go along. If you are an ACCA member, then this webinar will count as verifiable CPD if it's relevant to your career. And if you have any questions during the webinar, you can use the Ask the Question widget at the top of your screen. You can also raise your hand if you'd like to come off mute, and also feel free to use the chat function as well to leave some comments in there, questions, and engage with your fellow delegates. I think that's everything for the housekeeping. So Anne, can I hand over to you?
Yes, hello everybody. My name is Anne, and thank you for that introduction, Sophie. I'll get straight on with it because I know everybody is, as always, is very pressed for time. So I will just share my slides. Can you see my slides okay?
Yeah, we can.
Okay. Yeah, wonderful. Thank you very much. I'd like to make sure that you can see them as we go through. I will pause at various points just to check in with the chat and the Q&A and things like that to see if there is anything, because sometimes it's easier to answer questions as we go along rather than leave them all for the end. So I will pause. It also gives you a bit of a brain break as well, because I do talk at a bit of a rate of knots sometimes, and some of this could be new to you. So sometimes it just gives you a little pause to digest what's being said as well. So we're going to talk about external quality assessments, but before we do, I just wanted to put in some context around them in terms of the wider quality assurance and improvement in internal audit, and just kind of try and pictorially represent how the different standards that we have in the Global Internal Audit Standards fit together on this particular area. So standard 8.3 is called quality, and the two key things in there are that the Chief Audit Executive must develop, implement and maintain a quality assurance and improvement programme that covers all aspects of the internal audit function. And then it also says that at least annually, the Chief Audit Executive must communicate the results of the internal quality assessment to the board and senior management, and the results of the external quality assessments must be reported when completed. So, kind of this standard kind of dovetails and gives you that overall responsibility for a CIIA. What do we mean by quality assurance and the QAIP in internal audit are explained in the four things in the middle of the screen. So you've got your external quality assessment, which is in standard 8.4, the requirements are in there. You've also got an internal quality assessment, which is required to be done periodically. But as you can see, you need to include that in your annual report to the audit committee as well. So it probably needs a refresh annually to make sure that what you're reporting to the audit committee is up to date and relevant. You've also got performance measurement, standard 12.2, which is also pulled into this area a little bit as well, in terms of, that's where you're monitoring progress against your strategic objectives and initiatives for internal audit, as well as delivering on the internal audit plan. So that ties into this the requirements in standard 8.3. And then also your oversee and improve engagement performance in standard 12.3. This is your ongoing supervision Q&A of audit engagement work, and that needs to feed into that overall QAIP and the reporting mechanisms in there. So just looking at QAIP in general and some of the challenges there, because some of these do relate into an EQA as well. So there's kind of a number of areas in there. So, and they all relate typically to resources. So how do you resource quality assurance and EQAs for internal audits? When you're working typically in an internal audit function that is very stretched, and doesn't have a lot of spare time to actually do this, particularly if you're a small internal audit function, kind of in an organisation. So, the human challenges can be due to, simply the number in the internal audit team. So not having, sufficient segregation to allow for review of engagement files, for example. But in an EQA perspective, that can also mean that, kind of supporting an EQA assessor with interviews and conversations and providing, the completed files and access to software and things like that. That can put additional burdens onto the internal audit team. The competency of the internal audit team and audit committee, understanding what really good looks like. Again, that can impact on that ongoing and those internal self-assessments, but also in the EQA, because you're you're not up to date with maybe some of the technicalities around some of the standards and things like that, or aware of how an EQA should work. So can you challenge your EQA assessors to make sure they're doing a good job? Time available, I've kind of already touched on with the number in the team, and also your resource model that's used. Where do responsibilities for quality assurance lie if you've got a mixed resource model? So if you've got an in-house head of internal audit with a small in-house team, you outsource your IT audit plan to one firm, and then you have individual audits outsourced to other firms on a case-by-case basis. That mixture of model, where does the quality assurance fit? How does that impact an EQA? And that does impact the practicalities of performing an EQA. EQAs cost money. So again, there might be a financial challenge. And also technology, the quality assurance features of any audit software, or if you've not got audit software, how is that embedded into typically a Microsoft Office kind of package of templates and solutions? So those are some of the kind of general challenges. They aren't new due to the new Global Internal Audit Standards. They've always been there. So, it isn't something that the Global Internal Audit Standards have particularly triggered. But there are some new bits in the standards that do have an impact on EQAs. So I'm just going to pause there for breath. I can't see anything in the chat. I can't see anything coming up in the Q&A. So on that basis, I will carry on. As I promised, I'll give you a little mental break before we switch on to something more detailed. So the external quality assessment is explained in standard 8.4. And basically the chief audit executive, the head of internal audit, must have a plan for external quality assessments and discuss the plan with the board. The standards use the term board to mean a generic governance committee. Typically in the UK and Ireland, that is the audit committee. The word board means the highest part of the governance framework that has oversight over internal audit. So typically we refer that to audit committee or audit and risk committee or audit finance and risk committee, depending on your governance structure. It says that the external assessment must be performed at least once every 5 years by a qualified independent assessor or assessment team. That is no different to what was in the previous standards. So, it's still once in every 5 years, and it's assessing conformance and performance now with the Global Internal Audit Standards. And that wording in the standards is basically recognising that now in our standards, we do have performance-based standards requirements, such as the performance measures. That's a performance standard. So it's just reflecting that, but also the domain one and the purpose. Are you performing and delivering to that? The standard now also, as an additional thing, says that at least one member of the EQA assessment team must hold an active current CIIA. So they must be a certified internal auditor. And that's at least one member of the team. And that's in recognition that one of the key purposes of an EQA is to assess conformance with Global Internal Audit Standards. And the CIIA is all structured around the requirements of the Global Internal Audit Standards. So that's why that's in there for internal audit functions and audit committees to know that they've got an expert or somebody with a relevant qualification and a very explicit qualification that supports the work that's being done in an AQA. So, Global Internal Audit Standards changes that are impacting on external quality assessments. I've talked about the EQA standard itself and some of the changes there, but that 5-year requirement has always been there. However, what's changed elsewhere in the standards is having an impact now on external quality assessments. And that is because one of the big ones is in Domain 3 and the essential conditions. And these are mandatory requirements that are placed on audit committees and senior management. So previously, those essential conditions in the UK and Ireland may have been best practice, things that you were already doing. So they don't, they aren't requiring a huge amount to implement. Particularly, but they are now mandatory in the standards. And it's this approach now, these new mandatory requirements, that are causing practical challenges around EQAs, because the conformance and performance of those essential conditions now have to be assessed as part of an EQA. Okay, so the audit committee itself has to be assessed, as does senior management. So this is something that in previous standards, it might have been done as a neat part of an EQA, but it wasn't an absolute requirement to be done. And there were some approaches that were adopted and some EQAs where the audit committee were never assessed and senior management were never assessed. So this is where we're seeing, and where the challenge particularly comes from, is around those essential conditions from a practical point of view. Historically, if you were in an outsourced firm, so a Big 10, an accountancy, professional services firm, and you were providing internal audit services to multiple clients, I know some have 200, 300, 400 clients, and they're all from different sectors and from different industries and of different sizes, and they all have different risk profiles. They are all unique. What would typically happen is that outsourced firm, that provider, we use the term multi-client provider of internal audit, would have one EQA that would look at how they work as a multi-client provider. And historically, that would have met the requirements of an EQA, even though that wasn't the intention behind the previous standards, but I won't explain that today. With the introduction now of these essential conditions, that one EQA and providing that report and saying it covers all our clients is now not an appropriate approach, because every audit committee and every senior management in all clients will be different. They will potentially have very different terms of reference. They will work very differently with the head of internal audit. There will be very different levels of experience and knowledge on that audit committee, and so on. The audit committee has 39 essential conditions, 39 mandatory requirements. Some of them are very task focused and can be done quite easily, but some of them are more subjective, such as the need to champion internal audit across and within the governance structure. That cannot necessarily be assessed easily from a desktop-based exercise. And if you're a multi-client provider with 400 clients, you are not going to want to do that for all 400 clients. That makes the EQA absolutely huge and very significant. So these are some of the practical challenges that the new standards have introduced, not because the EQA standard has changed, but because of Domain 3 and those essential conditions. Okay, so if a multi-client provider has one EQA and samples across its clients that will not meet the need of a full EQA for every single client, only for those that were sampled. Okay, so this is one of the challenges that came to light last summer. So we've been working with multi-client providers to talk about this. We have our own EQA service as well. So we do EQAs for multi-client providers. So we've been looking at that as well, and how do we deliver that? So that's a big challenge now that multi-client professional service firms, which many of you may work in, are facing for their internal audit. Now, one of the things this dovetails to is small internal audit functions, and leveraging the proportionality points within the Global Internal Audit Standards for small internal audit functions to help manage this challenge for multi-client providers. Okay, so this is something that we've talked about, and on our website we have two pieces of guidance, one for multi-client providers and one for small internal audit functions when it comes to EQAs, and they're very much dovetail with each other and support each other. So for those that are internal audit functions that are very small and they may have less than 50 audit days plan a year, I think that the definition of small internal audit functions needs to be very carefully thought about, particularly when you've got a mixed resource model. And the reason is that you may have an in-house team of 2 people and think that's a small internal audit function, but then outsource 1,000 audit days to one client, to one provider, 350 days to another, and so on. To me, it's the size of your audit plan, the entire audit plan, the number of audit days being delivered as assurance to the audit committee, that actually dictates whether or not you're a small internal audit function or not. Okay, and that's really key to think about, particularly for those who have a mixed resourcing model when it comes to internal audit. You can't go, well, my in-house team only has one head of audit, that makes us a small internal audit team. If you've then got a plan outside that is 2, 3, 4, 5,000 audit days, that's a large internal audit resource. So the audit plan days are really important in this from that perspective. But for clients, for internal audit plans of 50 days, and I've just plucked that out the air, we are not saying that is the benchmark to use, but to perform a full EQA for an internal audit function that's providing 50 days of assurance a year, that's a quarter of a full-time equivalent. Is it appropriate or proportionate to do a full EQA once every 5 years to support the delivery of those 50 days? And this is where the proportionality things within the standards that are written in there that you can use. So that's whether you're an in-house doing 50 days, or as a multi-client provider, you've got one client, you're providing the entirety of the service. So head of audit all the way through and delivering the entirety of the plan. Would you want to do a full EQA for them? Probably not. It's probably not relevant. It's probably not going to be helpful. And proportionally, from a cost perspective, it's just going to, dwarf the cost of the delivery of that service and what your income you're getting, and so on. Because for contracts with multi-client providers, that you're in currently, you also have the issue that you'll have put in there who's footing the bill for EQAs and the quality assurance. And typically that's been the multi-client provider, it's been the professional firm. Now we have this, well, if that means you've got to do an EQA for this very small client, that financially isn't going to be worth it from a cost benefit analysis. So who's paying for this? So these are challenges. These are things that, we need to think through as a profession, and what have you around an EQA. So like I say, it's some of the solution is because we can use the small internal audit kind of idea, but also the, kind of multi-client providers with 200, 400 clients that they're providing internal audit services on different style of contracts. We're just doing a case by case here. We're doing the whole IT audit plan here. We're providing the entire service over here from head of audit down. We're delivering the plan, but the head of audit sits in the organisation over there. There are so many different resource models, and it gets very complicated to understand that and coordinate that with this added challenge of how do we make sure that EQA provides an opinion on domain 3, which includes the essential conditions for audit committee and senior management. So this is a big bag of mess. Big bag of mess. I often refer to my cats playing with a ball of wool and it's all strewn all over the carpet and nothing makes sense and you don't know where the end is and you've got to wrap it all up. It's kind of it's this big heap of mess, lots of challenges coming at it from all angles. Okay, I'm just going to pause there because I've said an awful lot and I can see a red dot against the Q&A. So just bear with me while I click onto there. Oh, yeah, it's gone to chat. Okay. So somebody's asked the very pertinent question. Thank you very much. Are small teams still required to get an EQA every 5 years? So the standards say mandatory. All teams, yes, are required to have a full EQA every 5 years. However, the standards also explain that you can apply proportionality for small internal audit teams. So I'll come on to what that means and what that might look like. Okay. Now, an alternative to a full EQA for any internal audit function is an externally validated internal assessment. So there is that option as well. So, for a small, and that is absolutely in the mandatory standards, that is an appropriate alternative that you can use that's explicitly stated in the standard itself as an alternative. So you don't have to have, no internal audit service has to have a full EQA. You can have the alternative of an externally validated internal self-assessment. Okay, so that's there. But I will come on and kind of explain some of the solutions and kind of some of the caveats and how you can apply these proportionality ideas for your EQA and what those alternatives might look like. It isn't a definitive list. These are just suggestions that are in our guidance for people to think about when they're looking at this EQA challenge, a very real challenge. So, if your internal audit service is fully outsourced, but you're kind of thinking about, well, and the multi-client provider is sat there and is saying, okay, and this is true for a small internal audit function as well. There are things to take into account that can help you justify why you don't need a full EQA. One of them is audit plan size, as I've explained. So in a multi-client provider, you might go, this group of clients over here, we are only providing the audit plan size for that client in total is less than 100 audit days. That's half an FTE a year. Therefore, they're grouped together in a bucket and we'll look at an EQA approach for them. That is deemed by you as an organisation as a small internal audit delivery. Okay. Now, size of plan isn't the only thing here. You also need to think about materiality of the assurance that's being provided. So if this and that may depend on the sector or industry that the client is in or the organisation is in. So if you are financial services and it's a small, kind of internal audit function, then the need for an EQA may well be greater because it's financial services and because of the FCA handbook and expectations of regulators. Okay. It can also be more important because of the materiality or the reliance that's being placed on the assurance that comes out from the internal audit work, feeding into things like annual governance statements, annual assurance statements, so public sector in particular, where the internal audit work is used to help with is required to provide an annual assurance statement, feeding into the governance, etc., etc. So it isn't just size of plan that kind of is one of the criteria that makes you kind of think about, well, what is the right EQA approach? So you need to think about that. For multi-client providers, you can put them into buckets and go, right, that's our approach for that bucket of people, that's our approach for that bucket of people. And you can set out some criteria along the lines of plan size, materiality, those two in particular, to actually think about what's the right approach here. So once you've done that, you can then go, okay, well, over here, I've got a full, let's just ignore the large audit plans and what have you. That's a full EQA. That's that bucket over there. So every one of those clients needs a full EQA in its own right. Okay. So we've got to work out, we've got to group them, and we've got to look at how we deliver that. And we've got to have conversations with them. And then the small internal audit functions, it's like, well, that is our approach. That's what we're going to do as a multi-client provider to support them. And what we do, I always link it back to what the purpose of an EQA is. And an EQA, the benefit of it, the reason we do it, is to provide assurance, independent, objective assurance to the audit committee that the internal audit work is being performed in a robust manner in conformance with the standards. Okay, so it's an internal audit of internal audit. Okay, so if you start to apply internal audit principles, risk-based principles, which is what I'm talking about with the criteria, you can kind of see how this can kind of evolve and be developed. So think about what those criteria are, what your risks are for your internal audit service delivery, and help that use those to drive your EQA approach. Okay. The EQA approach, regardless of what approach you use, I will come on to them. There are some on screen, but I will come on to them. That has to be discussed and agreed with the audit committee. So whether you're a small internal audit function, a multi-client provider, whatever you're doing, the audit committee in the organisation has to agree the EQA approach. So if you're deviating from a full EQA, then you need to agree that with the audit committee. And that becomes part of the justification, the approval as to why you're not doing the full EQA. If the audit committee are satisfied that the alternative you're suggesting will still provide them with what they need, then it's okay, because it's an alternative way to reach the intent in the principle, which is to have a high quality, appropriate quality level for the internal audit delivery. Okay, so just think about that. You've got that. The other side of this as well is that when you do an EQA, whatever approach, whatever we do, the findings and the report has to go to the audit committee and has to be approved. The action plan has to be approved by the audit committee. So that's another challenge for a multi-client provider. If you've got 200 clients, that's 200 reports because of NDAs, because you're providing assurance on how each individual audit committee and senior management work. So another challenge, which is why we talk about a range of approaches and really thinking about this in the round and looking at different approach styles. So you can see on screen, I've got procuring a full EQA for a client. So your bigs, your head of audit all the way through, you're providing a big plan, full EQA for that client. I'm sorry, there's very little you can do to get away from that. You can have an externally validated internal self-assessment for each individual client on that, and that will be it. Justifying an alternative approach. If your internal audit plan has 3,000, 4,000 audit days on it and you're in financial services, it's a financial services client, that's a tough justification, I'm afraid. If you're at the other end of the scale, 50 days, and it's a charity, that's easier to justify. Okay, that's easier to use the proportionality argument. You can, in terms of trying to manage the practical impact of this, is perform a reduced scope EQA, but in a shorter time frame. So the suggestion on screen is that you do an EQA every 3 years, and every 3 years you focus on 1, 2, or 3 of the domains within CIIS. They are quite nicely linked. So you could link domain 1, which is the purpose of internal auditing, with domain 3 and domain 4. And then so that will be 1 year, and then you can link domain 2 and domain 5 for the other year. So you're not doing a full EQA every 5 years, but you're doing one every 6 years, but you're doing something more often than 5 years, and you're splitting it. So that is, just us putting forward that could be an option. It isn't that we're recommending it, that's the only option. We're not saying that is what everybody should be doing. What we're saying is there are ways to think about this a little differently, and if that would work, then that is something to think about and do. And like I say, if you're going with an alternative where you're splitting it up, or you're saying, actually, for this client, this group of clients, this bucket of clients, or this, we're going to do it once every 6 years because, and you've got a good justification for it, that's absolutely fine. Okay. Some of the justifications can include doing your own assurance map. So do a risk register for internal audit itself, do an assurance map. What are the quality assurances going on? When is that landing with audit committee? How does that map to the requirements in the standards? So domain 1, domain 2, domain 3, so all of them. How does that map? You've got an internal self-assessment. Typically people do a big, massive review and then do updates over a period of time, periodically, and then do another big update. How is that working? How does that feed into the assurance that's going to the audit committee that you're doing a good job and you're conforming with the standards? Client satisfaction surveys, are they getting all of those, each and every one that's done? Are they getting a summary report every quarter on those? So, what else is going on in terms of assurance against the standards that you can use? So I'm going to pause there and just kind of take a step back. There's nothing in Q&A, there's nothing in the chat, but I've kind of thrown, again, some ideas at you. This isn't, it isn't easy to solve in UK and Ireland because of those contracts, because of the way they've been done historically. And what I would say, if you work for a multi-client provider and you're involved in the EQAs of your own organisation, then one thing to do is to kind of really think about those different types of contracts you have and start from there, and have those conversations. But once you've got people in buckets, there is the opportunity to do sampling, and so on. So kind of if you're so there's the opportunity to do sampling. So if you're doing a reduced scope EQA that's just looking at domain 5, well, that's your internal audit engagement methodology. If you use exactly the same methodology across every single client, whether they're large, small, or indifferent, then you can sample. And you can produce a summary report because it's against your methodology. You're not going to be calling out individual clients on that because it's about what you do in your organisation. And if you're receiving or if you're outsourcing internal audit engagement to a multi-client provider, you can get that summary report to feed into your EQA in your organisation. So there are things and practical things that we can do around sampling. But first of all, you've got to take this step back and look at your different contract types and work out, well, what is our preferred approach and where would sampling be appropriate? It is certainly not appropriate to sample conformance against the essential conditions, okay? Because you are not in control of the audit committee terms of reference, how they minute things, how they interact with each other, how they recruit onto that audit committee, so what skills and experiences on there. You have no say in their governance structure, so how they interact with other parts of the governance structure as well. And that's the championing and supporting internal audit across the governance structure and so on. So it is complex, but there are some things that we're going to move on to next steps, but there are things that you can really think about. You just need to take that step back and be practical about it and leverage the fact that in the standards, there is recognition that proportionality is needed for small internal audit functions and public sector. And obviously there's things in regulatory areas that would also need to be taken into account around this as well. So I'm sorry, it's lots of challenges. We have some guidance on our website to help people work through this and some suggestions, but we are by no means saying these are the only solutions or anything like that. I'm just checking chat and Q&A again. Can't see anything in there. I hope I'm not frightening everybody on the call as well too much. There are ways through this. Honestly, there are ways through it, but it's a matter of going through a process to determine what the solution is. There isn't a one-size-fits-all solution to this. So, fully outsourced. So if you're internal, if you have got multi-client providers, either you work in one or you'll use one, then the next steps are really about reviewing the portfolio of contracts that you have in order to categorise and assess them against some set criteria. And then once you've got them in those buckets, you can then go, right, for this bucket, this is our preferred EQA approach. Okay, so here's a bucket, 50 days or less. They're all charities. Our preferred approach is that we don't do an EQA. Okay, and the reason is it's 50 days, it's a charity, they don't have the money, and we provide, there's all this other stuff that goes to audit committee on the quality of the internal audit service function. Okay, so that is an option not to have one, but you've got to really justify it. So you've got your buckets. Then you can look at some approaches. So you can commission, so some of the other approaches, some of the things to think about. You can commission an external assessor to perform a review of domains 2 and 5. And for that bucket, you know, you're just doing that and selecting a sample of clients. And then you can produce a summary report on domains 2 and 5, because 2 is about your internal audit staff, the code of ethics. And a lot of the evidence about that is in the file engagement reviews, which is domain 5. So you bring those together and you can do a summary report on that, which can be passed to all clients, and you caveat it, this is done on a sample basis. So that could be done regardless of what bucket somebody's in. So you could sample from big, medium, small, different contract types, different sectors, different teams within the multi-client provider, and do that. And it's purely on domains 2 and domain 5, because those are activities and things that sit within the multi-client provider. And if you work for the recipient of assurance from a multi-client provider, they can provide that report to you, and domains 2 and 5 for their work is covered. Okay, but that in itself is not a full EQA. It may be possible to include some elements of domain 4 in the commission of an external assessor to share with clients, but that does depend on the contracts in place and the level of responsibility, and it would need to be considered at a principal level rather than the full domain. So what I'm saying is domain 4 is the head of audit role, and what they do. So it may be that, you know, kind of the outsourced provider is not responsible for the internal audit strategy. That sits with an in-house CIIA. And obviously an internal audit strategy is required regardless of the resource model for every client. So that's something that you kind of could say, well, as as a multi-client provider, that sits with the head of audit that's in the function, so we don't need to do that. And that is a one standard within Principle 9, but you might be developing the IT internal audit plan within the multi-client provider, so that's standard 9.4. So this is where you can chop and change and have a look and do various bits and pieces. And creating a schedule, so those clients that need a full EQA, kind of having a schedule for those, and you might be, depending on the timings, you might want to do that every year. So for clients, because clients will have an EQA timed for themselves, and your summary report only has a certain lifespan. Anything that's a year older is not going to be able to be used by the in-house internal audit team as part of their EQA. So again, this is so complicated. We're not trying to complicate it, but it's trying to find practical solutions because of the essential conditions and the need to report to each and every audit committee. Domain 3, like I said, it gets trickier because of the essential conditions. No two client organisations are ever going to be the same. Regulatory requirements I've talked about, internal audit strategies and plan development in 4 will also differ from one client to another. So it's domains 3 and 4 where the complications really exist around this. And like I mentioned earlier, client confidentiality, if you found a problem in one audit committee in essential conditions, that doesn't mean, and you've sampled, that doesn't mean to say that problem's in any of the others. So you can't put that in there. You might do a lessons learned document or something like that, but it's not it's not going to result in a specific action for every client, is it? It's only going to result in an action for that one client where that error was found. And that's the challenge, action planning, reporting. Typically resides. Yeah, I've already talked about that's your mixed resource model. So, if part of your plan is outsourced, getting a summary report. And I've just popped in the slides here where the standards do talk about. So you'll have the slides afterwards. Where it does talk about where the caveats are, where where conformance can't be met with the specific standard. So where you can't do an EQA at least once every 5 years, how do you address it? How do what's the standards wording that supports you to be able to make that choice? Is on screen. So standard 4.1 says that where standards cannot be achieved, you need to understand the impact of that standard not being achieved. So what is the impact of not having an EQA at least once every 5 years? Discuss it with the audit committee, which you've got to do because you've got to discuss your EQA approach and agree it with them. And then you either address it by, well, we'll do an EQA at least once every 5 years, or it's a permanent thing and you put in your charter, we're not going to do one at least once every 5 years because this is what we do instead. We don't feel, what is the impact of that, etc. You can put that in your charter. But if you do want to move to that, what actions have you got to take to actually get you to a point where you can do an EQA at least once every 5 years? Okay. And where you take the decision to, we're not going to do one at least once every 5 years, the standards actually say that while conformance with the requirements is expected, internal auditors occasionally may be unable to conform with the requirement, yet still achieve the intent of the standard. And that's what I was talking about in terms of the purpose of an EQA is to provide independent, objective assurance that we're conforming with the standards, that we're doing a really good job, that we're meeting the needs of the organisation, etc., etc. So if you're still doing that and you can demonstrate that in a different way than doing an EQA, job done. Don't need to worry about it. Circumstances that may necessitate adjustments are often related to resource limitations or specific aspects of a sector, industry and or jurisdiction. In these exceptional circumstances, alternative actions should be implemented to meet the intent of the related standards. So that is where you have the rights and the ability to do something different. So coming back to the question, are small internal audit teams still required to get an EQA every 5 years? Mandatory, yes, but here is the statement that says if you can't, it's okay. What are you doing instead to meet the intent behind an EQA? Okay, so I just wanted to put that on there because I think that's really important. That was all the slides I had to go through. It's 1:45. We have 15 minutes left of the hour. So I'll keep that last slide up there. I'm just checking. There's nothing in the Q&A, nothing new coming to the Q&A, and nothing new coming to the chat. So does anybody, this is an opportunity, whether it's about EQAs, you want me to clarify anything, because I have thrown a lot at you. If you want me to clarify anything, or if you want to ask a question about this, or indeed something else related to standards, I'm all yours. So yeah, over to you guys if you have any questions. You can, of course, put your hand up as well if you've got a question and are just busy typing away, just to let me know.
Hopefully that's a good sign, Anne, that everybody
well, it's either a good
for you.
Yeah, it's either a good sign that I've explained everything and everybody's going okay and they're clear in their heads, or I've completely bamboozled everybody and everybody's lost. And I hope that's not the case, but obviously you will get the slides, be able to access the recording afterwards as well, so you can go back over it. And if you have any questions that fall out of it and you think about it, in a couple of days' time or what have you, then just let Sophie know and she can fire them over to me, or you can email me direct. I'll pop my email in the chat bar. Yeah, because it is really complicated kind of thing to kind of get your heads around. It is this complication of the essential conditions and the fact that you have to agree the EQA approach with each individual audit committee, and you have to report and they have to approve the findings and action plan for each EQA. So it's kind of, you can't get away with a blanket. We've done one EQA, here's a summary report. You can give it to your audit committees if you want, clients. That approach is no longer appropriate. I think I've typed my email address correctly. Yes. Okay. No questions.
Thanks.
Nothing coming through. No hands up. So back to you, Sophie.
Yeah, thanks so much, Anne. So if there is no questions, I think we can leave it there and finish a bit early. So thanks again, Anne, for all your advice and insights, and thank you for your session last week as well. I have got the presentation, so I'll make sure everybody gets that today. And as Anne said, if you do have any questions, let me know, or let Anne know, and I can feed those back as well. There will be an on-demand version available shortly, so I'll make sure the link is sent for that too. But thank you everyone for joining today, and hope you all have a lovely afternoon. Thanks, Anne.
Have a great day, everybody. Take care.